6 minutes past the hour. Welcome back. And I will tell you, I am so fired up on a lot of accords. Number one, the last hour with Congressman Lobiondo was just off the charts, and we actually wrote each other simultaneously. We know that every episode is special, but this was just fantastic. And we were writing the same thing at the same moment. You could just feel the energy. And thank you to all of our listeners and to all the callers that checked in, and Chief Sean Riggin of Pleasantville, and everybody that was a part of the last hour, a special edition of Ask the Congressman. And again, we will reconvene on Monday. I've sort of committed it to memory now. Let me go back to my day timer, though. Monday, July 25th in the 5 o'clock hour with Ask the Congressman, the next time that we will do this program. Joining us now, as he has for over a quarter of a century in the 8 o'clock hour on Tuesday mornings, Chuck Malamut. The following program is presented by Chuck, who is a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, before we get into your program, again, it's not obligatory. I really want to do this in the most appreciative way. Thank you for all your contributions. You'll see in the program book, there's 2 full pages devoted to your contributions to the Hurley in the Morning charity over all these years together. It's been incredible. I want to certainly thank your boss and your company also for stepping up for the past 2 years. Very, very big. And as you know, you got a copy of it. I wrote you and your boss this morning, and I thank John. So thanks, Morgan Stanley, for stepping up, because the contribution that you made will enable us to give a very significant grant to a worthy not-for-profit in southern New Jersey. So we're very excited about that. And also it gives me just this quick opportunity. I need a real just hero to step up. Paul Sandler, the general manager of the Palm Restaurant, has put together something he's never done before. He's given away one character in a silent auction. He's given away a certain amount of food, and that's always, fetched like $1,000 or more. But this year he's done something he's never done in all the years he's been contributing to our program. He has put together what I have titled the Complete the Palm Atlantic City Experience, and that is dinner for 2 for 1 whole year, once a month. And this is the amazing thing about that portion of the item in our silent auction this Friday. You don't have to ask for a reservation. You command it. If you want to go July 4th at 7 p.m., every day they're open, which they never close. Any evening they're open. You have any time you want for your party of 2. Chuck, have you ever heard anything like that before?
Pretty remarkable, Harry.
I mean, that's just for starters. So you have 1 meal a month for 2 people at the Palm Restaurant, and then you have they'll do a beautiful double caricature of you and your spouse, you and a business partner, 2 siblings. Whoever does this will get the caricatures up on the wall at the Palm. It's very coveted. It's usually, if you could even buy it, Paul values it at $12,000 per caricature. That would be $24,000, several thousand in food. What we're calling the VIP Palm Pass, like our homage to the Disney Fast Pass. It's even better because you don't have to wait at all. You don't say, hey, Paul, and I left this out. I will be sending the winner the private cell phone number of Paul Sandler, the general manager of the Palm Atlantic City, so that you have direct access. You're not going to be making a reservation. You're going to be advising that you're coming in. So I think this is incredible because it was something the size of which we've not received from Paul before. We didn't set the minimum. I had Paul do it, and Paul set the minimum opening bid at $5,000. Now, I've thrown out a few things. You can spoil a spouse. You can spoil another loved one of some kind. If you have someone that's very important to you in your business, what a way that all year long, every time they're dining at the Palm, and they have, because I mentioned yesterday, Chuck, that folks have kids and you never know with like where the kids are going to be. If all of a sudden on no notice you have a free evening, you don't have to worry about, we can't get a reservation. I'd love to go do this, but we can't. Now you can. So I need somebody to step up, start that out with the $5,000 bid, and I think away we're going to go with that. And I just appreciate the opportunity to mention that this morning, Chuck.
Harry, very, very generous for sure on behalf of the Palm and the management, and hopefully,
what a prize!
Hopefully, you'll
incredible.
get beyond the 5,000. You start doing the math. We know what a picture's worth 1,000 words.
Yes.
Maybe a picture's worth hundreds of thousands of dollars.
Well, I'm telling you, I'm not greedy. If somebody just bid a $5,000 opening minimum bid, I'd be the happiest man going, because I know additional charities. I'm feeling a little bit of pressure because Chuck knows me. I try never to overpromise and underdeliver, but we have so many not-for-profits that need our help that this 5,000 or whatever it would turn out to be is going to put us over the top. It's very integral. We're very honest about this on this program. We no longer have Marty and Sheila O'Boyle, and you're talking about over $25,000 a year that they used to represent. It is very, very stressful to try to replace that in small increments. It's a supply and demand type of situation. All right, so Chuck, in any event, anybody out there that can do it, you know how to get a hold of me. A minimum bid would be awesome, and away we go on that. Chuck, what's the market update?
Well, Harry, it seems as if over the last several days we went from risk on to risk off, where the markets this past Friday and then again yesterday had basically triple-digit losses. And if you look as we got into the end of last week, the volatility is starting to creep back in, and we went absolutely nowhere. So if you take a look. The S&P was actually up marginally. It was up 0.1% for the week. So going into the beginning of the trading week yesterday, the S&P and the Dow are up, roughly 3.6 to 3.9%. The Nasdaq is still in negative territory, and negative 1.7. And there's a whole further discussion that we can have later with respect to what is happening globally, particularly in Europe, particularly in the UK. So,
not exactly the environment to consider raising rates, is it? Well,
the market, obviously the Fed starts their meeting today. They'll conclude tomorrow at 2:15 or so. We'll get the announcement. If you were a betting person, there's a very, very high probability, probably in excess of 90+%, that are saying that if there will be no increase at this meeting, July is still very, very questionable. Your May jobs report, again, was atrocious, I guess is probably a good way to describe it. And then
I'm predicting it's going to even be revised downward, if that's possible. It's hard to go from zero, lower than zero, but
and then the third item that's getting everyone's attention now, and it's just starting to get a lot of people really paying attention, is the fact that the upcoming referendum in England to determine whether or not they're going to be part of the EU or they're going to walk away.
And you just took the words out of my mouth, because I know that was going to be last on our list, but I was going to ask you, could we move it up? Because I'm not going to take a victory lap or spike the football. But remember, it's your brother Harry right here that said as recently as last week, when the whole world started to just assume that, the temporary insanity had passed and the damage that was done by the American president, trying to dictate to the United Kingdom how they should vote, and that went over very, very bad. It looked like all the numbers, all the polling data was favoring that this question would pass and that the United Kingdom would stay within the European Union. I said, as the contrarian, I think they're going to vote it down. Now it is, in the most recent polling data, 10%. The vote no crowd is leading.
Well, Harry,
and I know you're aware of that.
The polls,
it's a big change.
The polls come almost daily now, and for the longest time, it was very, very evident that there was going to be an exit, and then it
flipped.
It shifted and went back to no,
by double digits.
We're not going to go. And now,
right.
as we get as we get to that June 23rd date, it seems as if, and again, can you trust the polls and to what extent, I guess is what it gets down to. But now what is happening, it is flipped back again where the majority of those being polled are in favor of exiting. Now,
correct.
When you exit, it's not like you vote today and you exit tomorrow. This is going to take upwards of several years for this to happen. And I think, Harry, the concern is, yes, England exiting. Okay. But what does that mean? What is the future bode for other countries? Will they look at the EU and say, "Hey, we want to walk away as well"?
Yeah,
so
that could easily happen.
Now,
they'll take a look and see how it's going. The United States president basically threatened the United Kingdom that we can't do business with him. He said even such a forward date down the road, how long it would be before we could do business with him again. I don't believe that, but he said it. And so I think other nations, Chuck, will actually take a look and see, did the world end because they left? I think people are going to find out, no, it didn't. And then I think maybe more may emulate that.
The world is not going to end, certainly, but you think about the ramifications within the country and then outside within the as part of the EU. I'm not certain.
Well, hey, Chuck,
I'm not certain that it's the be all cure all to the problems over there.
Here's what I'll concede. The easiest path would be the path of least resistance, and that would be to not leave. That'd be the easiest thing to do. That's not to say that getting out would be, in the long run, totally or terribly injurious. But I think the easiest thing to do would be just to stay.
Well, Harry, yeah, absolutely. I mean, if you look at what is happening, in Europe, I mean, they are several steps behind, so to speak, and I know I'm going to have a real problem saying this because I think you're going to probably take the belt out and whip me, but the economic recovery of the U.S. Has been
no belt, but it is laughable. The economic recovery, but you're not saying that with a straight face, like it's something to be proud of. Like we've had a solid recovery.
No, but I mean, what I'm trying to say is that
American history.
That on a comparative basis, what is happening is that the recovery that we have seen here, we're waiting for in Europe, because if you take a look at what happened, to that part of the world, they were sort of behind us, and now all of a sudden they're going to be potentially faced with another set of circumstances, which could very possibly make it more difficult. And look, if you look at the markets, and we don't like to focus on a day-to-day basis, certainly, but if you look at the FTSE and you look at the DAX and you look at the CAC 40, the three largest exchanges in Europe, today, they're down anywhere from 0.8% to upwards of 1.6%. So that we're now back to that risk off. We move very, very quickly from last Thursday or so to what I'll call a gradual risk on to one where investors are sort of fleeing, to the hills. If you look at interest rates in Germany for the first time, their bond that they trade on a day-to-day basis dipped below 0% for the first time. And our 10-year that we look at right now is below a 160. So if you kind of say to yourself, Harry, if we kind of re-rack the tape, we said in
who goes 10 years in this environment?
People do.
That's shocking.
You need. It depends what the circumstances are. If you need yield, and you don't need your principal back in a relatively short period of time, and you understand the potential volatility of the asset, but you'll get your asset back.
People take that.
People do, in fact, do that, and institutions do it. I mean, the money has to go someplace. It has to get invested.
That's true.
It can't just sit in cash with zero yield, and in some cases, not in this country, but outside of this country, negative yields.
Brief timeout. We're going to be right back. He is Chuck Malamut, the official financial advisor to the Hurley in the Morning program, give a call to Chuck and his team. Chuck is the managing director of the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010, to reach the Malamut Group for all of your financial planning needs, and you'll learn Chuck's concept of total asset management coupled with the all-important asset allocation. So very important, and Chuck has spoken about that at all times, best of times, worst of times, just the importance of that at all times. This portion of our program also brought to us by The Official, the exclusive golf club to the Hurley in the Morning program, Harbor Pines Golf Club at 500 St. Andrews Drive in Egg Harbor Township. And for Father's Day, which, Chuck, happens to be your boy right here's 56th birthday, my birthday this Sunday on Father's Day. It's only happened a few times in my lifetime. I was born on Father's Day, and it's maybe happened that I'm aware of maybe 5 times or so that I can remember. It doesn't happen all that often. But this Sunday, there is a great program at Harbor Pines just for dads. Harbor Pines Golf Club, South Jersey's favorite place to play, owned by the legendary Gerwicks family. They are sure to please Dad this Father's Day with a great price for your round of golf for Father's Day this Sunday, $79 all day. Father's Day specials in the grill room include $5 all-day breakfast, $2 all-day drafts, and the locals' favorite birdies, burgers, and beers lunch, just $12. 609-927-0006 on the World Wide Web at harborpines.com. And this Friday, setup is Thursday night. Got a lot to do. And fortunately, the weather has made a turn in our favor. I hope that we continue to see progress there. But we have to plan as though it's going. You can't worry about what you can't worry about. This Friday morning, beginning at 8 o'clock, registration hour, breakfast hour, 9 o'clock shotgun start for the 9th annual Hurley in the Morning Charity Open this year at Harbor Pines Golf Club, 500 St. Andrews Drive in Egg Harbor Township. Back with Chuck in just a few minutes. Stay with us. This is Harry Hurley, and I'm with the Mayor, Charles Kane, owner and operator of the Auto Plaza, Egg Harbor Township. Mayor, tell your listeners who are looking for a car, why should they choose the Auto Plaza?
Harry, it's our full-service department, selection, and hassle-free financing alternatives that have set us apart for over 17 years. Over the years, we've been the recipient of many sales and service awards, as well as receiving an A-plus rating with the Better Business Bureau. It's been a real honor for us. We are now serving a second generation of sales and service customers. Stop in today. You're going to love our staff and experience what makes us different.
For all of your automobile service, parts, and sales needs, call the Auto Plaza at 609-646-2447. That's 609-646-2447. And visit us on the World Wide Web at myautoplaza.com.
The Auto Plaza at English Creek. Roll with Mr. Tire.
Hey, wake up with Harry Hurley and drive home with me, Sean Hannity, 3 to 6. It's all happening here on WPG Talk Radio 104.1.
Thank you very much. Welcome back. 24 minutes past the hour. So, Chuck, we moved up Brexit because that has certainly turned. I was, sort of smiling when I saw the latest polling data a couple days ago that said it went my way. I just think when push comes to shove, the reason I went the way I did, some people are known just to be contrarian. But when I look at something that people are looking at the opposite way, I think about United Kingdom, very proud. Somebody comes in and tells people how to vote. They don't like that, and they go the other way. So it's going to be interesting to see if the vote no momentum can continue, or does this thing turn again, which would be a wild ride, showing that this thing was looking terrible, that they would remain in the European Union, then looking like they would remain in the European Union, then that they wouldn't be, and if it flips one more time before Election Day, that will be indeed interesting. And I do believe the polls. They're scientific in nature. When you have a 10-point lead in something, it usually goes that way. And each side has enjoyed a 10-point lead on the question at different times. Sort of reminds me, what's the future going to bring with our own important ballot question, Chuck? Because guess what? My sources tell me that that's really near a pick'em now. It
is a pick'em. That's what I understand.
It was very substantially in favor of no. So, but I do know some things I can't say. Believe me, there's going to be a rigorous vote no movement that's going to become very self-evident in the near future. Chuck, before the Fed, and you did cover a little bit about May employment growth and so on, and before we get into U.S. labor market, corporate earnings, corporate buybacks, and some of that stuff, let me ask you about the Puerto Rico debt case, because the Supreme Court, for those who don't think about this, Puerto Rico is a territory. So the Supreme Court has swag and sway and cachet over Puerto Rico, just like they do here in the United States, Puerto Rico being a territory, in a 5-2 ruling. I'm not sure who either didn't vote or recused, because we have 8 justices, but only 7 participated. The Supreme Court ruled against Puerto Rico. For those who don't know, Puerto Rico was trying to restructure the debt of their financially ailing public utilities. They're in decades-long, financial distress, but they were trying to do something at the local level, and the Supreme Court said, no, you can't.
Yes, Harry. They obviously missed a recent payment. I think it was the June 1. There's money due, principal and interest, July 1. So this indicates that we're not willing to help, or don't want to help, I guess.
How come we're not hyperventilating over Puerto Rico like we were before? This seems like
I think, Harry,
it doesn't even matter anymore.
Well, no, Harry, I think it's like anything else. I think it will cycle back. And if you look at, once we get close to July 1st, I think it's going to become more of an issue. You think about what's on investors' plates right now. There's a lot. So, sometimes, a situation like a Puerto Rico will take a back seat.
They have $72 billion in public debt that they simply cannot pay.
There's the revenue stream is not there, and it's unfortunately
now Obama
the
president
definitely
wants to bail out Puerto Rico.
Yes, he does.
But the United States Congress does not want to bail out Puerto
and
Rico.
It's and maybe Congress is looking at, say, hey, we have enough problems here that need resolution and funding.
What would potentially Puerto Rico failing mean?
Well, obviously the bondholders, they have gotten
would it cost us more
beat up to begin with.
Would it cost us more to bail them out or not to bail them out?
I think it would cost us more not to bail them out.
Yeah, I do too.
At the end of the day,
I thought you were going to say that. And you know so much about this. I know so little about this stuff. But that was my inclination, was that this sometimes you on principle you just do this kind of thing, because I think there's a concern if you bail out Puerto Rico, then you have to bail out New Jersey, and you got to bail out California, and you got to bail out. It doesn't end.
No, Harry, it doesn't end. And if you look at, as you mentioned, the weaker states. I don't know, did you mention Illinois?
I did not, but
okay.
You did, yeah.
So you have a number of states that need financial support and certainly would welcome it. But the government is saying here is, hey, we're not willing to help, and I'm going to be very, very interested to see as we get to that July 1 date, what happens. There has been sort of, it's not that it's not known, but it's not been well publicized, a number of mutual fund companies that built portfolios around municipal high yield debt.
Oh boy.
And they took a very, very substantial position in Puerto Rico.
Oh, well, they missed the May 1st debt payment of like $372 or $379 million. I forget which it is. It's one of those. What does that mean?
Well, I think ultimately where they are now, they're now investors that bought or were convinced to buy this paper. They've instituted some litigation in an effort to reclaim from the investment house that built these portfolios or built these funds. That basically you made some really, really poor choices, and you put our capital at risk, and as a result, now we want to be compensated for your inabilities to properly manage a situation.
We're going to get our bottom of the hour break in. His program is flying by. As always, Chuck Malamut. For all of your financial planning needs, turn to the exclusive financial advisor for me, our charity, and the Early in the Morning program. the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010. Let Chuck and his team go to work for you, and they'll demonstrate to you their perfected concept of total asset management coupled with the all-important asset allocation. 609-383-2010. When we come back, Chuck will talk about the labor market, corporate earnings, corporate buybacks, and anything else that comes up in our final power segment straight ahead, 31 minutes past the hour. With Chuck Malamut, I am Hurley in the Morning on WPG. Talk Radio 104.1.
New Jersey's elected leaders and the good casinos have a plan for Atlantic City, a plan for hard work. The kind of hard work local 54's casino workers do. But whenever there's a disaster, there's always someone trying to take advantage. The Wall Street billionaire who controls the Tropicana and the Taj Mahal is a wolf. Plenty of money, but always hungry for the next kill. The Taj has put their workers on welfare for health care. We expect the Tropicana will be next. Put us on welfare so the taxpayers take care of us. We're the middle class in Atlantic City. Welfare for health care is a sham. Thank God New Jersey's elected leaders have condemned the Tropicana Taj Mahal welfare plan. So where do you stand? With the real plan or the welfare plan? Stop the Trop and the Taj by not going there. Because on Wall Street, money talks, and they'll listen to that.
Paid for by Unite Here International Union.
Hi, it's Mark Levin. Join me at 6 this evening. Now back to the mayor of the morning, Harry Hurley, on WPG Talk Radio 104.1, South Jersey's talk station.
Hey, thank you. Great one. I am Hurley in the Morning, 32 minutes past the hour, with Chuck Malamut, the official financial advisor to the Hurley in the Morning program. For all of your financial planning needs, turn to Chuck. The Malamut Group at Morgan Stanley's Northfield office, 609-383-2010. 609-383-2010, 609-383-2010 for all of your financial planning needs. Chuck, the latest on the U.S. labor market.
Yeah, so Harry, I don't want to burst your bubble here because the eternal optimist that you are.
Yes.
What happened, if you look at that report, it continues to weigh on investor sentiment. It is because it's one of the three hot items right now that investors are looking at. But I think you need to kind of keep this in perspective. It was certainly not the first time that a reading has been disappointing.
So rate doesn't matter anymore because it's 4.7% unemployment.
Well, no,
we should be ecstatic.
So May happened to be the sixth time over the last 5 years. So we had 60 reports, of which 1/10 of the time, or 10% of the time, it was disappointing to above and beyond what everyone's expectations were. Now, the jobs data doesn't call into question the overall health of the economy, we don't think, but does put a lot of uncertainty on the Fed. So the Fed is looking at what to do. They are, like I said before, they are meeting today and tomorrow. I'm pretty certain.
Zero chance, baby. Zero.
But the Fed.
Say it.
Harry,
say it.
I'm not going to say zero.
Say it.
No.
Right.
I will never say zero.
I'm saying zero.
But there's a very, very high probability there will be no increase. But the Fed.
Where's Bill Malamut? Bill, let's get a free pizza party.
The Fed is on a trajectory where they want to raise rates. Okay, and I think that
they want to, but they can't.
They
desperately want to.
This meeting, there's a very, very high improbability they're not going to make a move. I'm not quite certain. I mean, everybody, I've heard July, September, December 2017, but if you could get into their brains and kind of understand where they're thinking, they do want Harry to increase rates.
They desperately do, but the how do we say this? The circumstances on the ground make it prohibitive. There is no. I know you never say zero because it's totally irresponsible. But I'm a lay person, so I can say it. There's no chance.
All right, so now you're going to laugh me out of the building
because you're going to talk about that. Go ahead.
Because we're going to talk about the labor market here for a minute. So
as Jackie Gleason playing Ralph Cramden would say, Har, hardy, har.
So I try to deliver to you and your listeners.
I'll tell you, I'm under a lot of stress this week, Chuck.
What the world is thinking.
You are.
I know, comic relief. Thank you.
You are cathartic and you are therapeutic
relief
in nature. Please give me a Kris Kringle belly laugh right now.
All right, so Harry, let's talk about the U.S. labor market. As you identified, where unemployment is at 4.7%.
Yeah, spectacular.
So, as the
Go ahead.
As the economic expansion that we are living through, matures,
surviving through
as it matures and moves forward,
enduring.
We're almost at what we describe to be full employment. Okay, so
I got to take my headset off, kids.
But Harry, this is
full employment. How many millions had to permanently leave the labor market for that statement to be credible?
So now that we are approaching full employment, the job creation is slowing.
The tears are going down my face.
So
I don't know if I'm laughing or crying.
So as job creation is slowing, wages have been increasing, which is actually good.
Pennies.
Which should help.
Say how much they've increased, Chuck.
They haven't. No, Harry, they have increased almost fairly significantly. I don't remember the actual percentage. It wasn't pennies.
It's pennies.
It was like maybe 3 to 5%. I mean, if I remember correctly.
Well, I take that back.
But
then.
So what it gets down to is, I know that you're, like I said, you're laughing me out of the building, but consumer spending.
You know me well.
Consumer spending should remain on a positive track. So we expect productivity levels to increase, which is going to increase wages, which ultimately should increase corporate profits. Because remember, we came out of the first quarter, and it was a very, very difficult quarter. And all the indications were, as we got into the latter part of this year, that we would begin to see improved earnings. Now, the problem that we've had is that, think about the first quarter. We had a drag from the oil patch. We had an increasing dollar that basically was out of control. So we think that earnings are going to trend higher, but as we get there, that path is going to be rocky. So Harry, let's take a step back here. It's sort of a quiz show for you.
Yeah.
If we started at the beginning of the year and everyone was fairly convinced after December that we would have multiple rate hikes in 2016.
Yeah.
Hasn't happened.
No.
Would you, would you have invested in utilities as you got into the beginning of 2016?
I know where you're going with this because I know what has happened. I'm going to say no, but
would you have invested in energy?
No.
Okay, so
but it both would have turned out very well.
2 to 3. So if you look, and you talked about earlier about contrarian,
yeah,
and I know what you're referring to.
You know me well.
So the top 3 S&P
I love my contrarian
sector performers were utilities, telecom, and energy. So if investors take a page out of the book, so to speak, sometimes you don't go with the crowd. You have to. And you don't feel great in doing it.
Requires courage.
But ultimately, as you can see, at least
right?
for the first 5+ months, is that we've had sectors perform above and beyond expectations that no one had ever envisioned what was going to happen. You okay now? You're back to normal.
Chuck, I'm telling you have no idea. I am in such a better mood. I mean, I wasn't in a bad mood.
So let's talk about corporate buybacks for a second,
yes.
Okay? So if you take a look at what has happened, S&P companies have repurchased $165 billion of their own stock in the first quarter. And that's been, if you go back in time, it's the strongest quarter that we've had since the third quarter of 2007 and the second highest, level in history. So that indicates there's still so much cash, Harry, out there that needs to get to work. So we think what will happen is that trend will continue and dividend increases will continue as well. Now, one of the things that's holding us back here is the fact that we talked about earlier, what is happening globally. the 10-year German bond actually got into negative territory this morning. What is happening? Interest rates are decreasing as bond prices increase, as you get that risk on and capital moving from equities to the safer havens. Would you have ever expected that the 10-year today is below 1.6%? No, because you were looking and everyone was thinking we're going to 3, we're going to 3.25, we're going to 3.5, and lo and behold, look where we are. So
nobody saw the first quarter coming, especially the first 2 months of the first quarter. Let me throw a hypothetical out. I know you don't entertain hypotheticals all that often because you deal with what is, not in a hypothetical. But just say hypothetically that we know that in less than a couple hundred days we will have an election for a new executive.
Actually, I thought it was 151 if I heard correctly.
Yeah, and 220 before the next president takes office. And we have two choices. One would be the third term of Obama. The other would probably be something that would be Reagan-esque, Kennedy-esque. And this is why I'm crossing over, because I know your show's not about politics. I'm citing Republicans and Democrats. President Kennedy lowered interest rates, and the American economy just skyrocketed. President Reagan lowered interest rates and did other advantages for business and industry. Here's what I think about as a layperson. If you unbridle, business right now is just getting it in the neck from government too often. If we get we're going to have new leadership. If we get new leadership that sweeps with a clean broom, and say that business and industry says, hey, the boot is off our neck. There are incentives to hire new people, to take prudent risk, and to build things. Right now people are closing things. Rather than pay these onerous things, they say, oh, the heck with it. I won't even do that enterprise. And then people all lose their job and things like that. If we change this thing, I predict the first quarter of next year could be absolutely unbelievable.
Well, Harry, I mean, the markets have indicated as we get to the end of this year that earnings will continue to, increase. And yeah, I agree with you.
When you say earnings increase, is that top line and bottom line?
Yes,
because that's what we want.
And one of the things that we interestingly enough, as we were chatting, U.S. retail sales was just reported, and as it turns out, for the month of May, it was up. Hold on one second here, Harry. It was up unexpectedly. Was up 0.5% for the month of May versus 0.3%.
And at the same time you break that, I can break German bond, hit zero. It's kind of interesting.
Yeah. So what is happening here, if you look, and again it gets back to, what is happening here, not only domestically but internationally. So, over the last couple of weeks, we've seen a lot of economic news, and it's been mixed. You've had, again, an increase in global risk, as we'll refer to it. Markets, for the most part, have a fair amount of resilience. And I was thinking up until like Friday and yesterday that the market was holding up very, very well. So, again, we talked about, a couple things, the UK referendum, Fed policy, the labor market.
If the UK left the European Union, would that have any effect on our markets that day?
I think what's going to happen.
They would go down, right?
I think, everyone is projecting that international markets will, and domestic will all get hurt. But, if you take a look, Harry, at what has happened outside the U.S., we've, for the most part, got to all-time highs, last week. Other regions outside the U.S. have not fared so well. I mean, the UK is, going into yesterday was down 11%. Germany's off 17%. China and Japan off more than 50%. So I still think there are opportunities out there, and it's a matter of if investors are astute enough and understand where they need to go and when they need to go there.
Chuck, your program always flies by. Love your insight, and people that tell me all the time they just love your program.
Harry, I'm happy to offer you some comic relief today.
No, it was all serious. All good.
As you take off your headset and you're on the floor laughing, I understand.
Well, it wasn't at you. It was at the news.
Good luck with the golf tournament. I know you will get nothing but sunshine, great weather, and a wonderful attendance.
And, Chuck, you will be our guest at 8:30.
8:30, yes.
Yep.
That's what.
Right in my book.
Okay.
Thank you, Chucky.
Thanks, Harry.
Thank you, sir. He is Chuck Malamut, the official exclusive financial advisor to the Hurley in the Morning program. And the program that you just had the opportunity to listen to is presented by Chuck Malamut from Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. We have taken so many calls today, dozens. We have dropped, I know, a ton of calls. If you want to jump in, we're going to have 10 minutes uninterrupted. If you want to call right now, first one in, first one up. It's the first time we've had open phones all morning. 609-407-1450 if you want to call right now, and we'll be back in 3 minutes.